Aloha, this is Joshua Hayes at Big Wave Trading for your September 9th update market wrap. What did I say yesterday? I said the gains were nice yesterday, but it's very possible they could be reduced by a 3% drop the very next day. I don't like predicting the future, but guess what? I wasn't predicting the future. I was simply following the charts. And the charts proved me right, as the New York Stock Exchange fell a negative 3.64% today, and the S&P 500, fell 3.41%. Once again, you can see that the 50-day moving average is the barrier, is the resistance level. Until we can break out above this white line on extremely heavy volume, which we have failed to do so ever since the October top, there is no way anyone should think about buying stocks. I don't know how to make this any more clear, but I need you guys to start listening to the chart patterns and to stop listening to CNBC. I heard so many people talking about Steve Jobs and Apple today that some of my subscribers have covered their Apple shares already, which are just now breaking down, and that's just not the proper way to trade. The proper way to trade is to go with the full trend. There's too many traders out there, and until they leave, there's no way my market's going to be ready for a buy and hold. They've gotten all the leaders now. The banks are re-rolling over. The home builders that were trying to bottom, everything that's tried to bottom is now rolled over. So basically, there are no leaders anywhere whatsoever. Medical is it. Medical sector is the only place where you can find leaders. But nowhere else. If you ask me, should I buy this stock? If it does not exist in the medical arena, no, you should not. And no, you should not until these prices are above the white line, and the white line is above the purple line. Why some of you guys can't hold on to your shorts while this setup is like this is beyond me. But I want to show you the NASDAQ and show you we have the same exact thing in the NASDAQ. Price is below the 50-day moving average, and the 50-day moving average is below the 200-day moving average. That's all you need to know. You don't need to know anything else. Since October, it's been nothing but carnage, and all you should be thinking about doing is going short. And for those of you who covered stocks today, thinking that today was a capitulation day, you really don't seem to understand that on this weekly, as you can see, we are just now breaking down. We're breaking down on heavy volume after heavy volume roll off in early 2008, middle 2008, and now in the later part of 2008. This is a major breakdown, not an opportunity to go long. Let's look at how the Dow Jones Industrial Average looked like today. All that good positive action it was making over the 50-day moving average has been reversed right back below it. Some people say volume was lower than yesterday, Josh. You talked about volume being lower than yesterday on some of the rallies, and you say that's not good, so how can lower volume be good? Because stocks can start to sell off on low volume, which is obvious here in May, and they can end the sell-off with heavy volume, which is obvious here in June. There should be no misunderstanding about this. This index is all about shorting right now, and that's all you can do with the market trending below the 50-day moving average, with the 50-day moving average below the 200-day moving average. Nobody in their entire right mind should be, and look at this, now the S&P 600 is now below the 50-day moving average, with the 50-day moving average below the 200-day moving average. So you now have every index, including the very important IBD indexes, which we will look at right here if they come up. I don't know if they're going to, okay, they will come up. Let's look at the IBD 100 index. Look at this weekly chart. Look at this daily graphs chart. Look at how far it is underneath the 50-day moving average with the 200-day moving average trailing it. These are leading stocks. These are your top stocks with the best earnings and best fundamentals. And look at what their index looks like in a complete clear downtrend, along with the New York Stock Exchange, the S&P 600, and the NASDAQ. Every chart, every index is below the 50-day moving average, with the 50-day moving average below the 200-day moving average. Nobody should be going long period. You should only be looking for shorts still from fresh breakdowns that are no more than 15 to 20% away from their all-time highs. That could include a stock like Apple. Here's what Apple looks like now. If you're just looking at this chart and you're seeing a buy opportunity, you really have not learned anything from history, because the 2008 sell-off is so nasty on so much volume, and the next rally is on so little volume, that now all of this big distribution should have you running for the exits and running to short this stock. This is what a long-term daily looks like, and it completely looks like that this is the rollover that takes this stock back down into the 100s, possibly even the 40s, 30s, and 20s. When these leaders fall, they fall a lot, and they can fall all the way back to where they started. And in 2004, they started around $25, and so that means that they could easily fall back to $25. So these are not the kind of stocks you want to buy, and if you're short, you definitely don't want to cover now. This is a fresh breakdown. Look at how much room it has to go down. I am just shocked by some of the trading I am currently witnessing from other horrible websites that were once great websites, like TheStreet.com and RealMoney.com. I believe Kramer's down 18% for the year. This website has been destroyed and is full of nothing but poor traders that tell you to buy stocks like FWLT. If you can't tell that FWLT is completely rolled over and broken, and you're recommending this to buy to people, you still have not learned that you only buy stocks when the index prices are above the 50-day moving average, and the 50-day moving average is above the 200-day moving average. Unless this scenario right here exists, you do not buy stocks, period. So all these people that are telling you to buy stocks on the way down on CNBC and TheStreet.com, they do not have your personal interest in mind. I wish more of you could understand that, and I wish more of you could learn to go with the trend. It would make this a lot easier on me. But this is Josh Hayes at BigWaveTrading.com, teaching you stuff that I love, but stuff that I feel some of you are not listening to. Aloha.